Hello everyone, this is Marvin from StockMarketPlan.com coming to you with the Stock Market Watch for April 13th, 2011. I had some technical issues with computer and a vacation here and there, and here we are again. Fortunately, nothing much has happened in the market. The last cast that I did was back on the 23rd of March. It was right in this area right here. And I spoke about that the market was, I liked what I was seeing here, the market trading sideways. I'm looking at the spiders here, of course, symbol SPY, representing the Standard & Poor's 500 Trust. And I also mentioned that in order for us to move higher, this is what I like to see, this kind of basing out and then go high, potentially go higher from there. It would be more productive than just this keep going up kind of stuff here and then sideways. So on that day, I also said that we had the 20-day and the 50-day moving average right above our heads, right here. These two lines here converging. Okay, so it was solid resistance, and I also said that the longer we stay below this level, the more bearish it would be in my mind for the overall market. So the very next day, the 24th, right here, boom, we go over it, we close above it. Now, that was one thing. I also mentioned that it would have to do it soon, and it usually does it within 4 or 5 business days from a market bottom like here. So we were right in that range to be ready to do it, but also more importantly, not only close above those two averages, right, but also do it on heavier volume. Okay, and this is what I call the confirmation day that we're going to get a new leg to go higher. Now we've got one, we closed higher, but look at here, dismal volume. Okay. Now I always say price first. This is price, volume second, but this is a very good supporting indicator to any move, especially when you're breaking out to new high ground like we were here on the 24th, the next day from the cast. So we closed higher and then we started moving higher. And I said I would start adding, if I saw those two things happen, I would start adding into position, which currently is 25% equity, 75% non, so basically cash or bonds or whatever. So, and we got one, but not the other. And since from here to here, we're talking like hardly any percentage points, right? Because that would be the next level of resistance right there, right? So I said, you know what, I'm going to stay put. So we're 25% equity, 75% cash still. We see all of this stuff happen here. And now I'm getting excited because we're coming down here to retest these averages. Okay, and we got to see how we act over here, how the market is going to act, the S&P 500. And if it starts trading sideways above these averages and then finds a new leg up. Now I'm also looking at this here, this trend line here that I just drawn, okay? So we can do this and tighten up, have these averages come up this way, and then a breakout through here with the volume that I was trying to look for over here, which we didn't get. So definitely there's a lot of I mentioned shuffling of sectors back and forth, but again, the overall markets are struggling. They are trying to find new ground, but the big money crowd is not getting involved. Okay, so it's just like blah. This right here, that's just blah, So it's just, there's not, your room of making money in a market like this is just tougher, that's all. I'm always trying to stack up chips on one side so I can make better, have a better chance of success. So, and this is just not, this is not doing it, especially coupled with the volume, how bad it is. So if we close below these averages anytime soon, that's going to be very, very tough for the market. Next point of support is going to be right here. Okay. Right there. That'll be the next line of support. So as we come down, we might see some buyers come in there. And then this 50-day and 20-day average become resistance. They'll probably be around here somewhere. Okay. So we can bang our heads on there and maybe go lower. Now the 200-day moving average is starting to tighten up too, right? So we might see that. So definitely it could be very, very just wishy-washy, a lot of fakies. Okay, people, the market could start faking out a lot of people. Let's get in. This could be a big fake out right here. I bet you a bunch of people got in here. But if you're paying attention to technicals, like the volume patterns are very important when the market crosses meaningful resistance, like the 20-day and the 50-day converging here together, and you go over this area, you want to see this type of volume. Okay, at least this. You just want to see it over this yellow line. That's the average. That's 50-day moving average. Okay, you want to get above the average volume. You want to have heavy volume. Anyways, that's what I'm looking for now. Is where the market is gonna maybe tighten up here some more, and then boom, explode up. And at that juncture, yes, there'll be an addition to equity. But right now, again, just 25% equity. And as if we come this way and volume starts to pick up again, I'm probably gonna wait till I get here, and then maybe move out all in the cash. We just have to wait and see what the market has. But for right now, not establishing any new positions, definitely on the short term, and definitely in the long term, just letting the market digest what it's got to digest. A lot of bad news out there still, so we'll go with it one day at a time. Okay, guys, this is Marvin. Glad to be back. StockMarketWatch.com, and on Twitter, Stock Market Plan, and on Facebook, Stock Market Plan. Have a great one, guys. Good luck. Bye-bye.